Well, it was another weak session for the market. There's no taking away from that. In fact, at close, we were pretty much on the heels of 7,000, testing it on the downside. And that was the case with the broader markets too. It was really pressure coming in from all quarters, led by banks. And then, of course, it was the commodity space infrastructure, which pulled the markets lower. Also, given that we're contesting the futures and options expiry and the new series begins with three important macro events, participants would want to square off their positions and go light as the event risk is running high. We'll talk a lot about today's session and what it leaves for trade tomorrow, how investors need to approach the session tomorrow, because you're not only going to have expiry, which comes in the latter part of trade, but you also have the railway budget, which will keep the markets on tenterhooks all of the session. In fact, on the show over the next 30 minutes, we have some important voices lined up. So Andrew Holland will make sense of the markets, as will Sanjay Mukim, India strategist at BofA ML. Mayuresh Joshi, Angel Broking, will also talk about his investment ideas. And Mitesh will help our viewers approaching tomorrow's trade with technical strategies, as always. Okay, let's just highlight the top stories, and it was really about the Nifty, retest, Nifty closing below 7,100 and testing 7,000 in the session. Now, of course, unwinding was seen before futures and options expiry. The pressure came in from banks, and the Parliament panel report suggests that willful defaulters owe PSPs a significant amount of money, and that would keep the PSPs under pressure. There was activity in the sugar space. Policy-sensitive names have either way been doing well. We were talking about fertilizers a couple of days back, and sugar stocks were also in focus. Of course, the added push there was that global sugar prices soared, so you're looking at some price and volume traction here. And NTPC, the offer for sale got oversubscribed, so that's good news coming in for the state-run company. And that, however, did not spell too much good news for the stock price, was down about 4%. But overall, just increased appetite for a state-owned company, state-owned paper in the market was an encouraging sign. The question of the day, however, is that will the Nifty retest 6,900 before budget? Is that the kind of downward pressure that we're seeing in the markets? Mayuresh and Mitesh, thanks very much. Good evening to both of you. Mitesh, I'll start off with you. Do you think that that's going to be the next stop shop for the market?
Sorry, can you repeat that, Tanvi?
The downside risk, essentially, Mitesh. Do we go down to 6,900 and below before the budget? 2 sessions to go.
Yeah, I think that's a strong possibility. To be very honest, I think we've kind of broken down yesterday. That's on Tuesday, and I think we are seeing some kind of continuation happening now. I think this breakdown did suggest that the last up move or the bounce back which was there is clearly over, and therefore a minimum target should be a retest of closing lows made on Thursday on 11th of Feb, which is around 6,980. So I think that should be the first support level. The same day or the next day, I think the intraday hourly closing was around 6,920. So I think I have been talking about these two targets. But in case we start breaking below that, then I think further downside will also open. We are continuing with the pattern of lower top, lower bottom formation, and I think below 6,920, another 100 points can be shaved off from the Nifty. But the event will come with its own set of volatility. But I think for the time being, I think unless until we start capturing 7,100, 7,120 on the upside, the bias should be on the negative side.
Mayuresh, your sense, is it down to retesting the recent lows again?
Afternoon, Tanvir. Clearly, the probability still stays with the Nifty remaining extremely soft because we would be mirroring what the global markets have to offer. Having said that, domestically, I think the markets will look in terms of how the corporate earnings are shaping up, which are not expected to revive anytime soon. And time and again, I think we have discussed the issues related to pickup in the capex cycle, which is going to take a couple of quarters to say the least. So clearly, I think what happens with the budget, a key trend deciding event to watch out for on the direction of the economy. But I think the finance minister has very little fiscal space to probably get down the fiscal deficit to manageable levels and at the same time have a spurt in growth, specifically spending in infrastructure in rural economy spending. So clearly I think these important aspects are something that the markets are looking for. But clearly I think the softness in the markets is expected to continue unless we get a huge surprise from the budget where the expectations are extremely low key, at least at this point of time.
That's true. Banks are going to be key. Again, is it a short strategy there? Is that going to be the central point for the selling pressure, Mitesh?
See, banks definitely are a sector which in the short term is underperforming. The bank nifty has already made a fresh low, and a lot of banking stocks which are, which enjoy a good weightage on the banking index are giving breakdowns. The lowest closing for the bank nifty was on Wednesday, that's 13,800, and that was also the intraday low on the 12th of February. So in case you start breaking below 13,800, which looks like a very strong possibility given the fact that individual banks are still showing negative traction on charts, my sense is that we should drop off to about levels of 13,400 to about 13,350 at least. So a 4% kind of cut can happen in the bank nifty, and therefore we can see some individual stocks lose slightly more than that as well.
Mayuresh, on banks, given what the Parliament panel has said, the amount of the fact that the willful defaulters amount that they owe to PSBs is significantly high, how do you think that would, influence trade for some of these PSBs, which are already at very cheap valuations?
So valuations is the only factor that is in favor and support of a lot of PSU banking stocks. But having said that, if you look at the larger picture, I think the asset quality is still very patchy. And again, if you assume some lumpy accounts to go bust, you're probably expected to see further slippages happening specifically from the restructured book. Secondly, I think what happens with the recapitalization, because banks are in urgent need of capital adequacy to shore up their balance sheet growth. And again, I think the figure that the finance minister will put forth in the coming budget would be keenly watched out for. Third, even on the Uday scheme, I think one needs to identify and watch out for the pricing of bonds that the power minister has talked about, and what kind of contribution or a component will it comprise, if it does, in the SLR requirements. So I think all these aspects are clearly getting played out on a lot of the PSU banking stocks. Would the tepidness or softness in earnings continue? In our own sense, yes. I think a lot of bank managements have stated this fact that Q4 is going to be extremely soft. The provisioning figure is going to be very, very high. And clearly, I think if there is any delay, either in the credit cycle or the economy not picking up meaningfully, you might have some amount of tepidness going forward as well in terms of the earnings growth. So valuations remain supportive, but again, I think PSU banks, at least at this point of time, would be largely avoided unless we understand what the budget has in offer for them.
Sugar was active today, Mitesh. A one-day wonder?
No, I think sugar is a sector, which I do like on medium to longer term charts, despite the fact that the market has gone through correction. Now, every short term signal could possibly suggest that, we're trying to catch up on the slightly longer term trend. So in that sense, I think technically sugar is well placed. I do see like a Renuka. I think, we've had a call over there. I think it manages to get past 12 and a half level, which is the first target on the upside. And I think I would look at targets close to about 13 rupees 80 paisa, 14 rupees, which still gives you, about 10, 12, 14% kind of a trading up move possibility from here. I think similarly a Balrampur Chini, which has been an outperformer stock, but wasn't very strong on Wednesday. But I think if it starts to get past 82.5, 83, then some kind of a short-term breakout will take place on the upside, and again look at targets of around 90. So I think there's a good trading scope in sugar stocks. I think you will just have to time them with levels and look at the Nifty as well along with that.
Okay, fair enough. NTPC, the offer for sale, well received. Mayuresh, are you surprised? The family silver from the government stable is getting a good price and good interest.
So clearly, Tanveer, I think if you look at the larger picture of the next 2 to 3 years, the capacity that they are sitting up around 45,500 megawatts odd, they're expected to add on around 23,500 odd megawatts in the next 3 years. Having said that, the capital outlay that they've planned of around 31,500 odd crores for this fiscal, and the kind of regulated equity returns that one really expects for NTPC to deliver over the next 3 years are looking quite robust. So again, I think a 45% increase over the next 2 years, a 73% increase in terms of regulated equity is something that we are looking forward to. And again, I think it's got a very stable ROE model. The dividend yield is quite reasonable as well. And again, I think valuations are extremely attractive at that price of 116. Can it correct further with the market corrections? Absolutely yes. So does this give a long-term investor a good opportunity to start accumulating a stock like NTPC? Oh yes, it does, because I think valuations with earnings expected to be around 13.5 rupees for FY17 look extremely reasonable and attractive at this point of time. So again, I think we do have a subscribe rating to the stock with a target of 146 at the price of which it will trade at 1.3 times price to book.
What about Lupin? They have taken steps to meet US FDA compliance standards, and there's a lot going for the business.
So clearly, I think what happens with their Goa plant is something to be watched out for. In terms of their ANDA pipeline, they've got a very strong ANDA pipeline. And what happens with their OC business is something to be watched out for. So they're obviously expecting it to grow beyond the $100 million that they're probably envisaging over the next couple of years. And again, the branded business, specifically in the US markets, is something that they'll have the percentage points go up from the current 10% that they're currently deriving at. The domestic formulation business is holding up pretty well for Lupin. So I think all the factors probably are working in favor of Lupin at this point of time. The only issue with Lupin would probably be the kind of valuations it is deriving at the current juncture. And again, I think the stock price, at least at this juncture, is probably factoring in an earnings growth of around 25-26% over the next couple of years. So again, I think Lupin is a qualitative stock, but one really needs for declines. One should ideally wait for declines before you enter the stock.
Okay, gentlemen, stay on with us. We'll head into a break as we do so here. Andrew Holland and what he makes in terms of his expectations from the upcoming budget.
We'll quickly move from what the budget impacts are to again back to the global scenarios, because that's what's affecting FII flows at the moment, which continue to be hugely negative. But if you still have global headwinds which are going to bring down commodity prices, then obviously that would have a bigger impact on a lot of companies in India, and in particular then the banking sector as well. So that's why I think valuations are not the key at the moment. Because the economic growth is still slow, we can't really see as much as we'd like. We can't see where growth can come from the banking sector as well. So that just continues to plague the sector. On the IT sector, the other headwind now for the IT, some of the IT majors, is obviously the fall in sterling, which obviously would have an impact in terms of translation of profits or revenues going forward. So that's another dampener for some of the larger IT stocks with exposure to the UK.
Okay, Pranay joins in. Tomorrow's the railway budget, so highlights the expectations from the big event. Pranay.
One thing that's generally on top of everybody's mind is the passenger fares and freight rate. Last year, we had seen a marginal freight rate hike that had actually hit the volumes of coal, steel, cement and other bulk commodities. So this year, it's not expected that they will change the passenger fares or the freight rates, because they've also benefited from the lower diesel prices, but the pass-through is not going to be expected this time. Besides that, it will be the announcements on the big-ticket projects such as dedicated freight corridor, for which projects worth about 17,000 crore were expected to be finalized by March. So what is the update on that? Besides connecting Jammu and Kashmir, hilly regions, northeast with the rest of the railway grid. Also, what is the update on the high-speed rail and bullet train network that is going to be laid out, because we are looking to indigenize 200 km/h kind of trains over here. Also, the focus this time is going to be more on passenger services and modern amenities like Wi-Fi, modern stations, as well as safety and punctuality, some of those steps which have already been taken so far. The capex for this year was actually set at about 98,400 crore rupees, but in the first half only 28,000 crore worth of projects were executed. So we're going to lag and miss that guidance figure. Secondly, the revenue growth as well as the freight rate volumes have lagged the targets so far. So the railways is looking to enter untapped areas such as auto and FMCG to plug those gaps. And lastly, what is the improvement in the operating ratio? We're expecting it to be just under 90%, which could make it the best in 9 years. But there is going to be a burden of 7th pay commission recommendations which kick in from next fiscal, and that is going to increase the cost burden by about 30,000 crore rupees.
Okay, thanks Pranay for that. Darshan, also tomorrow's big event is expiry.
See, for the second day in a row, we saw heavy selling that came in. There were fresh short positions taken both on the Nifty and the Bank Nifty, and we ended very close to the 7,000 mark. Now, 7,000 mark is very, very crucial, because if you're seeing the open interest build up there, the total open interest there, it's in excess of 70 lakh shares. So if that gets taken out in trade yesterday, there might be more long unwinding that will come in. So for expiry tomorrow, if you're looking at it, 7,100 is, where there is resistance coming, and the support is there at the 7,000 level. Rollovers haven't been very, very impressive. They've come in much below what was there compared to last month, and also compared to a 3-month average. If you're looking at it today, there was broad-based selling that was happening, because if you're seeing the Nifty sell-off that actually came in, mainly it was led by the frontline counters. So the HDFC twins, there was ITC, there was TCS, and there was Tata Motors, which dragged the Nifty down. The HDFC twins, 20% of the Nifty fall was led because of these two counters. So HDFC contributed 12% fall on the Nifty. HDFC Bank contributed another 11 points fall on the Nifty. Tata Motors, ITC and TCS contributed anywhere between 8 to 9 points on the Nifty. So if you're looking at the trade setup currently, there was heavy base selling that was happening, and it was happening in Nifty heavyweights, and 7,000 is the most crucial level in trade. You have to watch out. If it gets taken down in opening tomorrow, there will be much more long unwinding that will happen, because there is huge amount of open interest build up that is being banking on the 7,000 support currently.
Thanks very much for that, Darshan. Mayuresh, come to you. What do you broadly expect in the next two sessions? The market drifting lower amidst these two events, and would you be very bullish on railway stocks with renewed sentiment post the railway budget tomorrow?
No, clearly, I think with these two big events, the volatility in the markets will continue, and the global markets are not aiding in any sense either. So clearly, I think with the railway budget in perspective, and the railway stocks in particular, what kind of order flows come through, specifically in terms of rolling stocks, that is engines, wagons, is the key theme to be looked out for. Again, as Pranay was pointing out, I think the operating ratio is expected to be around 90%. What probably happens with the capex allocation, and our own expectations is close to 1,25,000 crores. And they've actually got a line of credit from LIC. The Japanese funds are probably partially funding the capacity expansion plans. So what happens with passenger trains announced, doubling of lines, the gauge conversion, giving a leeway to their working capital constraints, the return ratios will improve. But again, I think largely it is a move which is restricted to the railway budget. And again, I think any significant announcements is not going to aid this. I think the order wins have to be substantial, they have to be consistent, and they have to translate into balance sheet, which I don't see happening at least in the next few quarters, to say the least.
Okay. And in terms of trading ideas, how should one approach trade tomorrow, Mitesh?
Ideas, the first of them is LIC Housing Finance. It opened a gap down and has closed below important swing support levels of 405 to about 400. I think that could possibly suggest more declines happening in over here. I would recommend selling this one with a stop at about 408 half, and look at a first target of around 380 to about 375. And the second one is a conditional sell on Jet Airways, where I think the stock is just closed above the earlier swing lows of around 520, and in this entire correction we have had this level of 520 tested on 4 occasions, and the closing has never been below that. So in case it starts getting below 520 tomorrow, could be a minor breakdown in the chart. Sell then with a stop at 535 for targets of 490.
Okay. Chairman, thanks very much for making sense of the markets today and helping our viewers approach trade tomorrow. It's going to be a very action-packed day. You can't afford to miss it. Hope our guests were able to add more perspective to your thought process in approaching trade in tomorrow's session. Like I said, it's going to be critical. Time out then on markets tomorrow. We'll catch you with the markets first up tomorrow morning at 8 a.m.